So after we have prepared the journal entries, and of course, after the preparation of the journal entries for the merchandising activities, so we're going to post that in their respective nga ledgers. If we're using subsidiary ledgers, then we're going to post the transaction to the subsidiary ledgers. And also, if we're using the special journals, so from the special journals to the general ledger, or if there are subsidiary ledgers, then we are going to post it to the subsidiary ledgers. So after posting that to the subsidiary ledgers and to the general ledgers, so we will be able to prepare the unadjusted trial balance. And if it is unadjusted trial balance, we will still need to look into the transactions that transpired during the year and determine if adjustments should be made. So the same with the service activities or service operations, there are also adjustments in the merchandising cycle or merchandising operations. The merchandising adjusting journal entries are just the same with the adjusting entries for service operation, except that we have additional adjustment required for the merchandise inventory. So the same rules will be applied for the accruals, deferrals, bad debts, and depreciation. And the additional item that we need to take note is on the merchandise inventory. So there are two ways on how to adjust the merchandise inventory ending balance. We have the adjusting entry method and we have the closing entry method. So for using the adjusting entry method, we will prepare adjusting entry. So as its name suggests, there should be an adjusting entry if we're using adjusting entry method. And adjusting entry would be debit to inventory ending balance or merchandise inventory ending balance or the date at the end of the year, and credit income summary. And the closing entry for this method would be none, or you are not going to prepare any closing entry since we have already prepared an adjusting entry. So there's no entry because there's already an adjusting entry being made for ending merchandise inventory. On the other hand, if we are using closing entry method, to record or to adjust for the merchandise inventory, then there would be no adjusting entry because the adjustments or the entry would be prepared together with the other closing entries. Remember that our lesson in the closing entry, wherein we're going to close the income accounts and then close the expense accounts. We're going to close the income summary to the capital, and we're also going to close the drawings account to the capital account. So the entry for the merchandise inventory, and if we're using closing entry method, will be made together with the other closing entries. And the entry for that in the closing entries would be inventory end and credit income summary. But we can mix this inventory end, or we can add this additional entry together with the other closing entry. So kauban niya tong mga inventory beginning, purchases, purchase returns. So you are going to add this entry together with other income statement items. So here is an example for the worksheet preparation using the adjusting entry method in a periodic inventory system. Okay, so remember sa periodic inventory system, we're going to record purchases, purchase returns, purchase discounts, every time we have transactions for those. But in the perpetual inventory system, the purchases, purchase returns, freight in, purchase discounts, these are recorded by debiting or crediting inventory nga account. So this is an illustration for the adjusting entry method. So we will start with the column on the unadjusted trial balance here. And then we have the columns for adjustments, then the column for adjusted trial balance, then income statement, and then balance sheet. So if we're using the adjusting entry method, so we have already mentioned that we're going to prepare an entry for inventory ending balance under the adjustments column. So that's why we have here the entry inventory end, then we have income summary, and we can find that under the adjustments column. So let us proceed with the other details. So we have, as usual, we're going to post the adjustments in the adjustments column. Okay, so these are already placed here. And then the next thing we will do is to compute what are the adjusted balances. So if there are no entries on the debit or credit columns under the adjustments, then we will just simply copy the amounts and place it in the correct column, whether debit or credit. So since this is debit, then we will place it under the debit column as well. So for the inventory beginning, for this amount here, debit balance, so we will just also copy that here. And then the rest, so for example, for this one, store supplies, since there's a debit for 500 pesos, then therefore, since both are debited, so debit balance and then debit to 500, so we were going to add, and then it was result to 5,250. And if the adjustment is on the opposite balance, so we already know that we're going to credit, if for example, the credit me siya, therefore we're going to deduct if it is placed on an opposite balance. Then let's proceed to the other items. So since there are no adjustments here, okay, for example, this one, this is a debit balance, 2,000. And this is a credit adjustment. So as a result, this is 1,500, which is the difference between the two. So instead of adding them, because the entry was credited here, so therefore deduction. Then for the adjustments, we're just going to copy and place it in the appropriate column since there are no beginning balances here. And of course, just copy also inventory and an income summary. So we will proceed to the extending the amounts to the income statement and the balance sheet columns. So we need to be familiar with the items that belong to the balance sheet and items that belong to the income statement. So first is, since the transactions here until the drawings belong to the balance sheet, so we expect them to be presented under the column balance sheet, except for the inventory beginning. Okay, so for the inventory beginning, it will be placed in the income statement column on the debit side of the income statement column. Then for the balance sheet, you are going to leave it blank. Then for the income statement items, which include the accounts starting from sales until the expenses. So just extend that to the corresponding column. So if it's credit, so we will credit that under the income statement column. If it's debited, then we're going to debit it there. Then for the adjustment, so we have to identify where these accounts should belong. So budget expense would be under the income statement, allowance under balance sheet, and so on. And we'll proceed to the inventory end. So where are we going to place the inventory end? So that will be extended under the balance sheet column for the inventory end, because this will be the inventory balance that will appear in your balance sheet at the end of the year. That's why diri siya gibutang sa balance sheet. Then the income summary amount, which is 12,000, we will place that under the income statement credit balance, credit side. After doing the extending of the amounts, then we're going to compute the totals under each of the columns. You will know if you have placed it in the correct columns, provided that you have placed the correct amounts. So you will arrive at the same balance here, most likely, if you have posted it in the correct columns. But again, it's not guaranteed, as I've mentioned in my previous lessons on preparation of worksheet, that it's not a guarantee that if you arrived with the same balances here, your answer is already correct, because pwede man siyang parehas. It can be that they have the same answer, but the answer itself is not correct because it's either wrong ang atong adjustments, wrong ang amounts adjustments, although we have placed it in the correct columns, mo arrive man gud siya at a balanced nga amount. Pero ang question is if the amount in itself is really correct. But it's already a relief if the amount here placed are the same both on the income statement and the balance sheet. Then again, we will compute the totals, and then we are going to bring down the higher amount between the two columns. So since 263,055 is greater, so we're going to copy that here and as well on the debit side. Then also under the balance sheet column, so since 1,055,653 is greater, so copy that below and also on the other side and compute the balancing figure. And this will determine if there's a net income or if there is a net loss. So how do we know if there's net income? If the credit side in the income statement nga column is greater than the debit side, because we know that the credit side here represents the income. So if income is greater, then there is net income. So that's for the periodic inventory system using the adjusting entry method. Now we will proceed to the closing entry method under the periodic inventory system. So again, if it's periodic inventory system, you can find the terms purchases, purchase discounts, freight in, purchase returns. If it is closing entry method, remember that we do not prepare adjusting entry for the inventory end, and we're not going to place that under the adjustments. So if you can see here, we cannot find the inventory and income summary entry. So there's no entry for that because the entry for the inventory end will be together with the other closing entries. So what will happen now to the inventory balance? So here, okay, the only difference would be we will not find inventory end here under the adjustments, and there's no income summary account here, but the adjustments would be on the income statement column. So specifically, this would only be the difference. So we're going to trace, okay? So look at the inventory balance. This is 24,300. It is placed under the debit side of the adjusted trial balance. So what we will do is we are going to place it the same with the periodic na adjusting entry method, we're going to extend it on the debit side of the income statement, but the inventory end would be placed on the credit side of the income statement column, which is, if you can observe in the adjusting entry method, there's no entry on the credit side, but in the closing entry method, there would be an entry which is 12,000, which represents inventory end. And you can see here under the balance sheet column, the ending inventory is with amount that is 12,000, and it replaced the 24,300. Okay? So, gi-kick out si 24,300, gipulihan og 12,000. And that would be the only difference between the two, aside from dili na siya makita si inventory and here sa adjustments and sa income summary. And you will still arrive with the same balancing figure, which would be the net income. Okay? So, that would be for the closing entry method. Now, let's proceed to the perpetual inventory system. So, for the perpetual inventory system, all of the entries with regards to the purchases, purchase returns, purchase discounts, freight in, they are all recorded in the inventory account. So, we are just going to make adjustments if we will find out that there are obsolete items, there are lost items, but the balance in your inventory here is already the updated balance. So, for example, there are no other errors, or there are no obsolescence or loss of inventory. That's why you can see here that the inventory end is already 12,000, which is the inventory end that we have recognized in the previous illustrations. So, updated na siya. Okay, so dili na kinahanglan magama pa og adjusting entries, except again kung naay mga losses on the inventory, so we're going to reduce the inventory. Pero at the end of the year, updated na ni siya kung pilay balance inventory. Here, that's already the inventory, and that's why you can see it is already 12,000. And another point to note is that there are no purchases, purchase returns, purchase discounts, and freight in. All of these items are already embedded here in the cost of goods sold. Then, no need to prepare inventory and or debit inventory and credit income summary. Since this is again perpetual inventory system, the inventory end is already updated. Okay? As you can see, dili na siya kaayo hassle, because it will automatically arrive to the correct na siya nga amounts in your net income, for this net income or for the balancing figure. So, wala kayo siya adjustments. So, except that you will just extend the amounts. So, this amount will be extended to the adjusted trial balance again if there are no necessary adjustments. And then, just extend that automatically to the balance sheet. Dili siya pares tong example, ganiha nga, naapakay i-adjust diri sa income statement, or you're going to place entry here under the adjustments column. So, automatic na siya. And you will still arrive with the same inventory balance na 12,000 here, and same net income, which is 74,138. If you like this video, don't forget to click like, subscribe, and hit the notification bell to be updated with the latest video lessons. Thank you for watching.